Hello, members, and welcome to our weekend trading review here on a Sunday, January 27th. A welcome to some new members. I think we have a couple new members floating around out this weekend. So welcome to you as well. And if you have any questions at all, and this is for members or new members, feel free to reach out anytime. Greg and I are always more than available to answer any questions you might have. So what are we going to talk about today? There's a lot I want to cover. I will try to get through it as efficiently as possible, but I think there are some important notes that I want to touch on today. So we're going to take a quick glance at the index charts. Of course, those were put out thoroughly yesterday in the weekly prep. So I won't spend a lot of time there, but we'll just touch on where we are within the indices. And we're going to talk about timing, as I promised. We're going to talk a little bit about timing and what that means to us. We're going to look at a couple of past trades from the 2017 portfolio that kind of go along with that timing message. We'll take a quick peek at the industry groups, see where some of the leading groups are at. We'll cover our open positions, and then we're going to touch a little bit on our trader development that kind of goes along with some of our open positions, particularly with audio codes. So we'll talk about that a little bit, and then we'll take a quick look at a few stocks on the watch list that we're looking at going into next week. So what do we have with our timing? Well, we have kind of a three-step process with our timing, right? We want to time the general market. And by that, I don't mean that we're trying to time every daily move and trying to capture every little gyration in the market. But we do need to know as a part of our process when to be involved with the markets and to what degree. There's basically three kinds of markets. There's roaring bull markets, there's markets that are just so-so, and there are markets that are downright crappy. So we need to know when to be involved and to what extent. We may even need to fire off a short trade or two if conditions are prevailingly bearish at times. So we need to know when to be in the market, how aggressive, and to what extent. And we also need to know the timing for each of our trades. We want to enter each trade at an optimal time, preferably as stocks are emerging from solid bases. We are willing to be patient to a degree with our stock trades, but in a perfect world, we like to time up these trades at a point where we think the stock is getting ready to make hopefully a substantial move. So we need to time the market. We need to have the proper timing for each of our trade. And most importantly, we need the time to be proven right or wrong with our thesis. As a part of our process, we're going to take some swing gains, some partial gains with a swing trade. And you know what? By all means, I would hope that we can take our swing gains, in 2 or 3 days and lock down gains. That would be great. So I am not opposed to taking gains quickly when we have them. But also as a part of our process, we want to find a few winners, at least during the year, that make substantially larger gains. And those gains take time to complete. Each individual stock is going to go through its own little accumulation distribution process. And sometimes those moves are perfectly in sync with the general market, and sometimes they're in a little bit of conflict in the general market. You might have a stock that's been really strong, and the market continues to go up, and your stock decides to go down for a few days while the market's going up. There's nothing wrong with that as long as we're not seeing any major distribution in our stocks or any obvious problems. Each stock's going to go through its own little process on the way up. So try to avoid marking your account to the general market action on a daily and even weekly basis. As traders, we always feel like we need to be trading, right? We're traders, so we need to trade. When most of the time, being patient and sitting on your hands is the best course of action. And that sitting and being patient is waiting for the proper stocks with the proper setups, and also once in a position to give the stock time to prove your thesis right. So with that, let's just take a quick look at a couple of trades from 2017 that really kind of exemplify what we're talking about. We had a trade in Ultra Clean Holdings. This stock broke out of a long cup and handle base in the fall of 2016. And we entered this trade as it broke out at about $10.37. Now, we waited about 10 weeks to lock in swing gains on this trade. The trade started to move, and remember, we're looking at a weekly chart here, not a daily chart. So this stock broke out, and it started to move forward, but it immediately went into a little bit of a sideways consolidation. Now, there was no need to really do anything. The stock wasn't falling back, triggering our stop, but it wasn't motoring forward, as quickly as we might like it to. But there's really nothing to do other than let the process play out. Well, lo and behold, 10 weeks later, the stock starts to move again. And we went ahead and we locked in swing gains. I left it out on the chart here. I apologize about that. But those swing gains are about 12.5%. From that point, we adjust our stop to break even. And this stock more than doubled for us, okay? But we were in this trade a total of 7 months. It takes time for a stock to double. So we need to have some patience once in a trade to let our thesis play out, hopefully, like we think it's going to. And it just takes time for these moves to unfold. We had another trade in SolarEdge Technologies that we entered during this week on a little bit of a breakout move. In this one, we were able to go ahead and rack up 10% gains pretty quickly. The next week, as a matter of fact. Okay, so this is what happens sometimes. Sometimes you buy your stocks and they shoot right up and they hit those profit targets real quick. And other times, it takes a little bit of patience. This trade we were in for a total of 4 months. We were stopped out of this trade at $37.95 after entering at $21.50. This trade we were in for a total of 4 months to make our 76% gain. And unfortunately, we got stopped out here, and we can see that that stock went on to hit almost $70 a share. And these charts will tell us something else. You're never going to find the exact bottom, and you're never going to get out at the exact top. If we can capture a portion of a stock move, and it's 30%, 50%, 70%, okay, that is fine. We're not always going to get out at the top. In fact, we're probably never going to get out at the top. So this will go to show you that you can still make solid gains in stocks, 100%, 75%, and not necessarily have to catch at the top of a stock move. So hopefully, as you go, you'll kind of learn that, we want to make money. We want to make it as quickly as we can. That's kind of human nature. But stock prices will evolve as they evolve, despite what our wishes are. And we just have to have some realistic expectations of how some of these price moves happen. So hopefully that helps a little bit. We're going to go ahead now and take a quick look at our industry groups like we do every week to kind of see what's going on. And we've been talking about those computer software industry groups busting up the leaderboard. And boy, we can see this week now, 3 of the top 4 spots now held by computer software. We have the database and we have some enterprise groups. And you can see how they've moved up from 6 weeks ago, 3 weeks ago, to even now this week. And we can also see, as we go down the list, some of these more defensive names, and we talked about this last week, some of these more defensive names are starting to drop down the list a little bit, which is a good sign for the market in general. Our beverages have dropped a couple more spots. And we can even see finance and mortgage related services. Look at this popping up from 87 all the way up to number 12 this week. And our defensive utilities continue to slide down the board. There's your water, there's your electric utilities for the third straight time from 6 weeks, 3 weeks ago to this week, continuing to drop. And we can see some of our semiconductor names showing some signs of life, from 95th on the list 6 weeks ago down to 19 right now, hitting the top 20. Our electronic scientific measuring equipment also gaining strength. And even some of our apparel and shoe related type of issues, those are starting to creep back up the list. You can see here the shoes from 71st 6 weeks ago up to 30 on the list now. And you can see some more of these defensive, the food, the utilities, again, continuing to drop down the list. Electronic contract manufacturers from 114 and 110 3 weeks ago to 36. So in short, what we want to see is more growth-related issues and the like start to creep up in the top 20 or 30, and some of these defensive names drop down. That's a sign of a little bit more risk-on attitude in the markets, and that's great for our style of growth investing. So there's a quick look at the industry groups. Now, let's go ahead and we're going to just glance over these index charts real quick. The S&P 500, I talked about in the prep. Things have been going well since this followed through day. There's been very little distribution, but you can kind of see we're starting to approach this middle ground between these two support resistance levels. It can be a little bit of a congestion area. So it remains to be seen how this is going to play out. But this trend line that coincides with the 200-day moving average is also getting approached. So that'll be interesting to watch. But the main thing we want to concentrate on are these horizontal support resistance levels. And we'll see what goes on as we start next week. Pretty much the same look for the NASDAQ composite. We can see we've got this big area between 75 and 7,600 that can be, we can start playing a little ping pong here. Who knows what's going to happen? We can't predict, but, we can start to play a little ping pong. We could even go back and retest some of these support resistance levels here. It's been pretty good sliding here lately, but nothing to say that we can't go back down and test some of these levels going forward. And if we do, that's not necessarily bearish. We can go down and test those and hold those support areas, and that would be a bullish sign for the markets as well. So that's just a quick look at the index charts. Let's go ahead and take a look at our positions. We'll start with Dorman, where we got stopped out. This one was just kind of playing around up here for us. Tried to take off. That didn't gain any traction. And a little bit of a burst of selling Friday afternoon started to hit the markets, and it went down far enough to trigger our stop at 88.03. And, you can see where our 50-day exponential moving average is. And you might say, CJ, why didn't you go ahead and just set that stop at that 50-day? I suppose we could have done that. And I generally, as trends start to evolve and mature a little bit, I'll kind of try to use that 50-day for a guide. But as a trader, you just got to make a decision as stocks start to advance. How much of those gains that you want to give back? And I didn't want us to go back down too far and end up scratching out on this second half. As I've talked about, it's early in the year. Try to lock down some gains and gain some confidence and start from a position of power. I didn't want to see this thing go ahead and retrace. And it did stop at the 50-day yesterday, but there's no saying that going into next week, that 50-day is going to hold up. So stop hit out of Dorman and on to the next things. Here's one of our newer trades, Keysight Technologies. This one we bought on the breakout on Thursday, followed through a little bit on Friday. Now, remember, this is a pilot position that we entered, still being a little bit conservative as far as taking new positions. And this one, I felt it's really come a long way. We did get a breakout of this cup pattern, but the stock has come a long way from about 55, right around Christmas time, and shot pretty much straight up. So, it's possible this thing can consolidate a little more, and we can go ahead and round out that position if we think we want to do that, if the market and the stock are continuing to act well. But feeling no pressure to go ahead and do that immediately. We'll just kind of see how that plays out. So no changes here. Stop still at 66, 63, and targeting roughly that $80 area to start taking some partial profits. And, again, as I've said before, it's early in the year. There are times when we get 15 or 20% that we might just decide to go ahead and close out the entire position. We'll just kind of see what the landscape is looking like with the markets if and when that occurs. Onto Aerojet. This one also a recent new addition. And same thing here. We took that pilot position, looking to possibly add. It pulled back a little bit the day after we initiated our position. Decided at the time, that we still were just going to be patient with this and not feel forced to go ahead and round that out to a fuller position. And you can see here, then it took off from that point, and we got up into the 40s on Friday before it pulled back and finished down on its lows. No major concerns. Volume was pretty subdued Friday, despite the pullback, intraday pullback. And again, we can see here, and we've seen this with a lot of stocks in the market right now, they've made pretty good moves in very short periods of time. So we may still very well get a chance to add to this position. This stock could kind of continue to pull back in its buying area and consolidate a little bit. So although it did shoot up on Friday, we still may have a chance to round out this position. We're just going to have to take it day to day and see what happens. And like I said, worst case scenario, the stock motors ahead, and we have a position in it. So no worries and no pressure to go ahead and fill out that position. QuinStreet, this one finally got motoring for us. Came back and tested this breakout area, and a lot of stocks that break out, they will come back down probably about half the time. They like to go down and test that breakout area, and that's exactly what QuinStreet did, and it's bounced nicely to this point, closing up nicely, nearly 4% on Friday. So hopefully this one has kind of turned the corner after the retest and will shoot up into that 21 or so area. We can go ahead and lock in some partial swing gains on QuinStreet. So really no changes as well on QuinStreet with our stop at 16.93. Tencent, our IPO breakout play. In a similar theme, this one here as well. It's really shot up over the last few days. Came out of the gates hot on Friday as the general market opened up really well. And it went ahead and tested that high that it made on Thursday. It also pulled back. But the breakout area held. And if we just take a quick look at the weekly chart, we can see the stock holding the breakout on a weekly basis. And we can see this from $12 to over $16 in a very short period of time. So making no judgments at this point with Tencent. Again, and this is a smaller position. This position is probably, I can't rule out rounding this one up and making this more of a full position, but we decided to just take a smaller risk on this IPO breakout on TME. So this may very well be all I decide to build up as far as position wise with this one. So stop stays at 1393, fairly tight stop when you consider the wide range of some of these bars, but I just feel if this thing comes back down below this area, it may be the best to just go ahead and evacuate. But hopefully this one continues to gain strength and goes up into our target area of 17 to, you can see here, around $18. Audio codes. This one, a lot to talk about here. I sent out a message, an alert on Thursday as this stock reapproached this resistance area near 13. Of course, we took a third of our position off a few days before at this $13 area. And a lot of thinking that went into this is the fact that they do report their earnings on Monday before the open, according to the information that I have. So we wanted to go ahead and start to take off at least a little bit, because you can see this one as well, just a kind of a straight up move, and didn't want to risk giving back any profit cushion going into those earnings on Monday. So we were just looking to take advantage and take some partial gains before those earnings. And boy, in hindsight, it would have looked like, boy, why didn't we wait till Friday? But we have to trade from the left side of the chart, not the right side of the chart. If you find a broker to let you trade from the right side of the chart, let me know and I'll hop right on that. But, in hindsight, yeah, we could have locked down a few more dollars on Friday if we'd have waited. But at the time, we didn't know if this was going to continue to hesitate around this $13 level. So we felt a good idea to take 2/3 of the position off the table with gains of 8.75% and 9.6% with those earnings coming in on Monday. So now we have a third of a position, and we can try to get in some trend following mode with this stock and hopefully capture some of those longer term, larger gains that we look for with our trades. And this kind of brings me to my next point. As we progress here, as traders, there are some things that we just need to do. And this is going to tie in a little bit to this audio codes, because as we grow here, I want you guys to be able to not solely rely on every move that I make. If you decide that you need to just go ahead and follow me exactly as to what I'm doing, I guess that's fine. But if you want to look to mature, we need to start to be able to make some more of our decisions on our own. You don't have to take a half year position off on each trade. You may decide you're more comfortable doing a third or 2/3. You may decide that you want to take a whole position off. It's not a dictatorship. We're here to kind of help and guide and kind of show you what we are doing. And if you feel you need to put your own little spin on things as far as when you want to take profits and so forth and so on, that's fine. We need to constantly evolve and adjust as traders. Okay. Now that doesn't mean that we blow up our methodology and we're constantly trying to change the way that we trade according to the way the markets are every week or every month. That's not what I mean by any means. But we can never think we got everything figured out. We may need to tweak it and adjust our process. If and when it becomes apparent, we need to do so. If we're trading for a while and we find that we haven't been doing the best job of locking in our swing gains, or we need to do a better job of timing our trades when we take our new positions. All these little things that we can get better at and evolve at, we need to constantly do that. We just can't think we've all got it figured out. This is too difficult to think that we've got everything all figured out and everything's just going to be roses going forward. Because whenever we do that and we get overconfident. We think things are easy. That's right when the market's going to come and kick you right in the butt. And we need to constantly be reaffirming our principles. We talk about a lot of things here, and it seems redundant. We talk about the same things a lot, rehash material. But again, we need to constantly remind ourselves of what we're trying to achieve, and we need to keep these things ingrained within us, because there are far too many distractions from day to day that can easily take us off the rails. So there's nothing wrong with constantly going over your fundamentals. Athletes do it. Professionals of any kind do it. They're constantly making sure they're staying on track. In this day and age, it's just too easy with the amount of information that is readily available on social media and so forth and so on. There's a lot of people out there. They have a lot of opinions. They're very easy to see. They're very easy to come across. So we need to stay grounded and rooted and remember what we're trying to achieve. And it takes repetition, and it takes constantly reminding ourselves of what our purpose is, what our process is, and what we're trying to achieve. And our ultimate goal is just to continue to mature as a trader. Once again, it's continue to mature. It's not that I've matured, I've got it all figured out, and I'm good to go. It's a continuing process of a trader every day, every week, every month. And as a member of the service, I would hope that you would be able to increasingly make some decisions on your own. Again, we share exactly what we're doing and when we're doing it. But there might be some stuff, for instance, on our watch list. There's some setups. Now, we're dealing with a $25,000 model portfolio here that we're using. But, so we can only take so many trades at a time. But if you have the means and the ability to take on other trades that we're not alerting here, and there's stuff on the watch list that we've been going over, and those trades trigger and we don't alert it, I would like to think that once you get the process down and really hone in on what we're trying to do, what we're trying to look for, and how we're trying to trade these things, that you would be able to increasingly make some more decisions on your own. And that goes, back to the audio code situation with the profit taking as well. I sent out the alert that we were going to go ahead and take another third of the position off the table on Friday. You might have said, yeah, you know what, CJ, I'm willing to wait. The stock's really strong here today. I'm willing to wait to see maybe Thursday if that stock breaks through that $13 level, and I can capture a little more on the upside before Monday morning. And that would have been fine. But, just know, as traders, we have to make decisions. That's what it's all about. We have to make decisions. We have to be able to live with them. But hopefully this service should ultimately develop into an ongoing support system for your trading, an additional research tool and information platform that supplements and constantly reaffirms your trading. And we think that the service is more than affordable to go ahead and do that on an ongoing basis. We don't want you to be robots. We want you to evolve as traders. And, once you feel that you've gotten to that point, again, it doesn't mean you need to cut the cord. There are still traders I follow and constantly read up on, and there's books I constantly go back and I reread them because it's just so easy in this business to get distracted from what we're trying to do and get off the rails. So hopefully, as you're here for a long period of time and you continue to evolve and mature as a trader, we'll still be here to help you support that ongoing trading process. So hopefully some of that has helped you understand where we're coming from. We'll take a real quick look at our watch list now, and I'll try to do this fast. I don't want this video to go too long. And of course, some of these we've talked about before, so this isn't all super new information, but here's one in Health Information Services, Viva Systems. This one here, we talked about how this, two traders can look at a setup, and one see a double bottom, and one just basically see a consolidation. Or another trader might look at this and say, hey, you know what, this is a cup pattern. Whatever it is, if there's certain pivot points on the charts that will trigger our trades. I felt for people that thought this was more of a double bottom, they could have entered over here. This would have been the top of that double bottom process. So a move above this level here at what was that pivot area? 101.39. So a move above 101.39 could have triggered a trade there. The stock has gone on now, and it notched a new high on Friday, breaking the top end of this pattern. But again, you can see the straight up move here in a short period of time. Gosh, 30%. So, in a perfect world, I like, if every pattern I can come across would be a cup and handle pattern, that would probably be my preference. But it's not a perfect world. We don't always get what we want. If we're waiting for the perfect pattern, we're going to miss moves on a lot of stocks. But my point in saying that is, when stocks move straight up out of these patterns, they are prone to at some point pull back. There's no saying that they have to. Viv can shoot right up here to 115 or 120 before it decides to pull back. But it's nice as these approach these pivot points that they kind of pull back and go into a lower volatility and a little bit of a volatility contraction, so they can really set up to make a sustained move going forward. But again, these cup patterns work just as well. History shows us, but do know that when they shoot straight up out of here, they can be prone to a pullback. PayPal, this one here broke out on Friday, was up over 2% out of the sideways consolidation. This group in general hasn't been the most robust, but it is starting to show a little more strength. Some stocks in this group are starting to perk up a little bit. And we can see here volume decent, not spectacular on this breakout. And again, as stocks start to mature and become larger and thicker and trade a lot of volume during the day, we may not get that 100, 150% or more volume on the breakouts that we like to ideally see, as we do with our smaller and mid-cap stocks that can really explode on these breakouts. QuinStreet is an example of that. That one is a smaller cap stock, traded around 700,000 shares a day, and really exploded on the volume on the breakout. But the bigger they get, sometimes to try to inspect double and triple volumes on some of these breakouts, it's not always realistic. About 9 million shares or so on average traded 11.5 million on Friday. So a decent breakout attempt by PayPal, obviously just passing that pivot point. So this one is still in a buyable area. And for members that are new, we never want to chase a stock more than 5% past those pivot points. That buy would be about 10 to 20 cents beyond that pivot point. Once it clears that by 10 or 20 cents, that would trigger a trade, and we don't want to trace it more than 5% past that point. And in fact, the closer that we can get it to that ideal pivot point, the better. But not a perfect world. We can't always catch those things at the exact perfect time. Back to the software issues again. Can't help but stop looking at some of these stocks. CyberArk looks like it might be starting to perk up here after resting for a few days. Volume picked up a little from the previous sessions, but nothing spectacular on Friday. But it did move up 3.5%, and it is getting closer and closer to this pivot point of 84.21. So keep these software stocks on your list. CyberArk being one of them, and we've gone over several of these. So you should have several of these software issues on your list. Keep looking at them, keep watching them, and look for some of these software issues to continue to break out and make new highs. This is one that we've looked at several times, beat. This one, sharp cup pattern. Nice day Friday, and we did get some volume here, nearly twice the normal on beat. And that one is quickly approaching this pivot here at 74.73. So keep this one on your watch list for a possible breakout. Earnings and sales growth have been great here on beat. Globin is one we've talked about recently. I think this one was in a morning note not too long ago. And this one busted out. I was tempted really on Friday to maybe go ahead and buy this one, but again, trying to not get too far out over our skis here. Maybe some of you did go ahead and take this trade. And we can see kind of what I was talking about. We have this cup pattern. It comes up and it kind of pulls back a little bit, and you can see the volume kind of dry up and settle in, and then boom, we get this big move on some volume. This one came in, let's see, 200,000 a day or so. So not quite double the volume, but historically speaking, not a bad volume day, and an increase in volume on this breakout in Globin, and that one is in the information technology services area. So this one's still well within the buying zone on the breakout. MedPace, we've talked about this one several times. Earnings and sales growth have been great here, so continue to keep this one on the watch list. This one continues in its consolidation, and it looks like it's kind of starting to settle into a little constructive sideways pattern that just may be the precursor of a possible breakout here in MedPace. So keep that one high on your list. Cornerstone On Demand, another software stock we've talked about. And this one, a double bottom type base. And this one actually did break out on some really nice volume on Friday, just passing that pivot area around 55.44. So there's another software stock breaking out, still well within the buying area there. What do you know? Software again, 5.9. This one quickly approaching all-time highs. And we kind of mentioned that perhaps, every once in a while, you might be able to find an entry that is a good entry that is not necessarily at a new all-time high. In fact, sometimes these cup and handle patterns will form. That handle will form a little bit below the all-time highs, and that trigger point will be just a little bit below all-time highs. So not necessarily all-time highs being the trigger for a trade. Sometimes it's a little below that. And this one would have been a little more risky with this setup. What I call a little bit of a cheater entry, as this stock busted out of this little bit of this consolidation here on some big volume, traded nearly triple volume on that day. So for those that wanted to take a little more risk and maybe start with a pilot position, could have bought the breakout here and then perhaps pyramid that position as it breaks out to new all-time highs. And that stock is approaching that area. So another software stock to keep on your list. And I think Zscaler will be another one. This one, and just what we were talking about, sometimes that magical pivot area may be just below those all-time new highs or 52-week new highs, whatever the case may be. And we can see that Zscaler did pick up in trade. We traded 2.5 million shares versus 1.5 million on average. It did come back in just a little bit and finish just about right on this alternative entry here. So Zscaler, another one to keep high on your watch list. And I believe we have one IPO to look at. Talked about some of the financials, definitely not high in the leaderboard, but some of them, in particular, that mortgage-related services finance looks like it's starting to pick up. So maybe start keeping an eye on some of these finance stocks to see how they develop. And this one here was an IPO back in November and came out and immediately went into a basing panel, cup pattern here. And IPO is always interesting to watch. This one looks like it has some solid growth in earnings as well. So keep this one on the list. Some of these IPOs can really be rewarding and take off once they break out, because obviously there's absolutely no overhead supplier resistance above these levels on these IPOs. So sometimes those can really get rolling. One more lower price stock, Photronics. This one has formed a really longer cup and handle pattern. Let's see here, 1, 2, 3, 4, about 5 months or so, cup and handle pattern. This one has had some good sales and earnings growth numbers recently. This one is on the list. Cup and handle with a pivot of around 1062. So here's another one, semi-equipment and materials. We've seen some of these semiconductor issues really start to pick up. Again, some explosive moves in names like Lam Research and Xilinx. So perhaps after a big correction in some of those semiconductor names, maybe that's another area that will start to pick up some strength here. So put PLAB on your watch list as well. We'll probably have another 1 or 2 in the Monday morning note to add to your watch list. So I think that covers everything I wanted to look at today. Hopefully some of this information helped. Again, reach out anytime with any questions that you may have. Enjoy the rest of your weekend, and we will see you Monday morning. Take care.